Good morning.
Good morning, good morning, good morning. Yeah, I believe you can hear me.
Yes.
Okay. So for today, yeah, we'll be talking about um market psychology, right? You know,
Okay.
let me guess. How long have you been in the community?
Uh, I joined last week.
Last week, all right. So I'm going to break down some of the things you'll be experiencing while learning how to trade or trading, yeah? That has to do with your psychology. And if you can master it, at least you know you're good to go when it comes to building your skill set here, right?
Okay.
First off is when it comes to psychology, it has to deal with your risk management, right? Let's say you did your analysis, for instance, and you're expecting a sell, right? You're like, okay, I believe this market will drop to this point and my SL is somewhere around here, right? Now, if you look at this, my risk to reward is just one, right? Mhm. I'm risking what I'm planning to gain is exactly what I'm risking, right? So this in itself is not even the best, right? So if let's say you want to take a trade here, your risk to reward is very, very key. Of course, you understand what I mean when I say risk to reward, right?
Yes.
Okay, yeah. So if you're risking, sometimes the average is 1:2 or 1:3. At least you know whatever you're risking, you're about to make either times two or times three of it. Get. So that's a way to look at it. You know, the time will come when you'll be so tempted, right? To even take, because let's say you encounter a loss, right? Okay, let me ask a question. When you make, which one do you feel more? Making $100 profit or losing $100? Which one do you feel more? Do you feel the
Losing hundred. Losing $100.
well, it's been said that the emotion we feel when we have a loss is two times greater than what we feel when we make the same amount in profit, right? And this loss always triggers us to do either of two things. Number one, to fight to make the money back, right? Or to even dump the skill set entirely. Now, most of us, we fall victim for fighting to make the money back. And if you think about it, it can be justified. You're like, you know what? I know I can make this money back. Let me just do this. Number one, that's pride talking. That's
Mm,
overconfidence, right? You are
mm.
estimating yourself. In reality, you can't actually make that money back, right? With your state of mind at that particular time. I don't know. Okay, you say you've been in trading, you've been here for like 1 week, but how long have you been in the trading space? How long have you been trading?
Like 2 years.
For 2 years. Amazing. So I know that you you believe or you agree with me when I say that anytime you think about going to make your money back, you don't always make it back. Yes or
You
yes?
lose more. Yes, lose more.
Exactly, exactly. So one of the things that would help us, because I'll be putting us because we are still learning, myself alongside, is when that loss happens, right? The best thing, right? The best thing is to accept that, yes, I was wrong, right? I was wrong and I didn't follow. Okay, first of all, you are wrong. Not jumping into making the next money, right? You can first of all determine, okay, what did I do wrong here? Is it that I didn't follow my analysis? I didn't follow my strategy? I didn't follow my trading rule? What actually went wrong? But if you followed all your rules and had the loss, in fact, in
Mm-hmm.
reality, that's actually a win, not even a loss, yeah? Because of course, loss happens in the market normally. Okay. So the best thing at that particular state is to evaluate the reason why and try to avoid it the next time. We always think, yeah, that um opportunities will slip off our fingers. You are seeing a set of let me just let me go in because if I don't go in now, boom, I'll miss this. But in reality, I'm not actually missing anything. If you come back the next day, you still see a similar setup. Come back next week, a similar setup. You come back a month later, a similar setup. In fact, one thing about market dynamics is that a particular strategy that is working for you, a time will come when something will just happen. That strategy will not really work as it should, right? Will not really work as it should. But then, most persons that don't hone their, let's say, of course, their psychology, the emotional discipline, they get to blow their account within these turbulent times. Yeah. But those that are smart who know, okay, this is not really going well. Let me just observe. If I don't see clear confirmations, I'm out of the market. If I see clear ones, I'm in, right? So if they get to stay, if they get to overcome that phase, boom, before you know it. In fact, it's funny that the market gets to start respecting your strategy after you blow your account.
Mm-hmm. Yeah.
It happens.
Yes.
It happens.
Yes.
So because the thing is, after you blow your account, if you start thinking well, right? All these things, yeah, sometimes in that stage of um losing spree, yeah, we our mind is seeing what our eyes is not seeing, or our eyes is seeing something and our mind is seeing something else. Yes,
Mm-hmm.
our eyes might be seeing a clear support for a buy, but our mind is seeing something else. Oh, this is a very good opportunity to sell. You start selling. You want to balance your emotion. That's all. You want the emotional equilibrium. Oh man, I lost it. If only I can make back my capital. At least let me end this week at break even. If only, if only, if only, if only. You end up losing and losing and losing and losing. If you just begin to blame, what's it called? Village people, right? So, number one is in your losing spree, don't rush to make the money back. Just sit, observe, know what is happening, right? No, just understand what is happening, right? Then, another crazy thing is your winning spree. Those two are twice as dangerous. In fact, being in a winning streak, yeah, it's more dangerous because in that state, you feel invincible. I believe you might have experienced that as well. You feel like, ah, man, I don't know. I think I'm the god of this market. If I place my sell, the market sells. If I place my buy, market buys. In a full week, no single L, right? Wins back to back to back to back to back. Now, this makes you actually get careless, overconfident. You don't reevaluate your trades like you do before. You just look, this one is selling. You take your sell, hoping it will go the same way. And of course, it doesn't. Your ego is altered. You're like, no, this can happen now. I saw the same pattern last week and I took the same trade. And, in fact, maybe you wrote in your journal, you're ending this week with some amount of profit. And that thing happens. It takes us back to what I talked about, going back trying to recover what you lost because you've been on a winning streak. You want to maintain that winning streak. Now you get to forget that the market is you're actually dead. So if you lose as well, that's part of the game. That's part of the game. You lose as well, right? You lose, and that's part of the game. The third thing is flipping the switch. I don't know if this is so easy for you. Have you ever been in a trade here? You did the analysis, right? And you think, okay, I'm going for a sell. Let's say, let me see if I can get the best opportunity or the best example here on this chart. Mm, um, there was a day that thing happened. Today is what, Monday? Okay, six. Okay, yeah, somewhere around here. Let's say you did an analysis, yeah, of course, on a 5 minutes time frame on this particular zone, right? You saw this, yeah. Looking at it, this looks like a double top. Like of course, this is a resistance zone. Of course, you've not know what will happen, right? You saw this. This is a high. This is a low. The market came here, creating a lower high. So in your mind, you're like, okay, somehow, yeah, this market will get to this point before thinking of buying again, right? And you sold at this particular point. At least with everything you know about trading, you're not so wrong selling from here, right? You're not so wrong selling from here. At least you go in, say you want to take your TP right here, have your SL just perhaps just above here. Like, okay, this is a very good trade, right? Then boom, what happens? The market takes you out. Like in 15 minutes, market takes you out. Now, there's something most people do, or those that, there's something most people do. Now, you get taken out. Instead of sitting to observe the trade, you take another sell, hoping that the market will say, this thing should sell. Now, in this particular moment, what you are doing is you are not trading what is happening on the charts. You are trading a mental bias you already have about the market, right? You've looked at the charts, you're like, you know what? This market is supposed to sell, right? And I expect it to sell. Sometimes we create a mental bias. It does happen to me, right? I look at the market, I'm like, you know what? I'm expecting a buy movement today, and I see clear sell opportunities. I buy at very good sell points. You can see, if it's kind of trade, let me see if I can draw something. You click a buy at this particular point, right? Like you're expecting something like this. But the market instead, from that point you entered, started selling aggressively. It does happen, right? So like this particular point here, the market actually bought from here, right? Your mental bias tells you, you know what? I think I'll sell from here as well. Let me sell from this other top. The market gets here. In fact, of course, you must have lose like 3 trades already, hoping to sell at this particular point. Oh, this is like a major resistance here. Let me sell again. The market took you out once again. This movement alone is enough to actually, if you trade proper accounts, you might actually hit your daily drawdown. If it's your normal life account, you might actually hit like 50% drawdown. All right. So when I mean flip the switch, it's simply boom. You hit a stop loss, right? You look at the chart. I think this market dynamics has changed from a sell to a buy. It's simple. You switch. You're looking for a short. You switch. Delete your whatever long sell bias you have. Go for long. You know what? I think I'll rather um going for the buy here. Target whatever I want to target. Take your profits and you're out. Right? But you might even choose to target the former high. Right? This is like 17 pips. Quite good with 0.01 loss. This is like $17. Right? This is like real good. Right? You might decide to wait for a pullback into this zone at this point. Take it. Use this high as your target. This is the 7 points, the $7 with the lowest risk, right? Have your SL just below this point. So you're risking like $14 for 37. This is like 2.53. You see how you just flip the switch right here, right? So sometimes it does happen. Yeah. We plot our analysis and we are seeing something else, or we are seeing something and the market does something else, it's very hard, yeah, for most people to switch on their idea on the market. It is so hard. It's not easily done. I don't know if she can relate. Um, are they Dara? I think I'll just call you Simi. Simi. Simi, I believe you
Yeah.
can. But yeah, it's so difficult to flip. I call it flip the switch. It's so difficult, right? So these are
Yeah.
like traits you would adopt, yeah, that would really help you. Yeah. Like right now, I am on a sell trade. Yeah, I'm active on this trade right now. Yeah. So if he takes me out, I shouldn't want to force another move, right? Now, why did I take this trade? Yeah. Number one, I'm already I have this rule, or let's say an approach I have when trading gold. Yeah, basically 5:30 UK time, just before UK market opens, right? If I see the market within or close to um support area or resistance area, if it's close to the resistance area, yeah, I take a sell, yeah. If it's close to the support area, I take a buy. Just like what happened here yesterday, right? Took a sell from here, of course, targeted this zone here. Then of course on that strategy I do trade during New York Open, right? So I'm already on a sell here. Reason being that okay, this is a high, this is a low. The market has been trending upwards anyway, but I see a lower high here. So I expect it to actually drop, at least drop well today. Market might actually sweep. There are so many liquidities to sweep here, sweep here, sweep here. This might actually even get to this point, right?
Mm.
But I know the
Yes.
amount of pips I chase on every trade I take, right? So if you watch this, it's actually similar to what happened yesterday. You have series of higher lows, higher. You have the high, you have the lower high, right? Then boom, right? So that's something similar happening here. You have the high, you have the lower high. Then I'm expecting the same thing. But I might be wrong. But I'm just banking on the data I've collected over time, right? So that's one good thing about trading. As you journal, you see the same patterns happening. Like, okay, so thing happened. I saw something like this the other day, and this happened. So let me bank on what happened that very day. And if it doesn't, it's fine, right? So back to psychology. The third thing, or okay, I don't know if it's a third, but the fourth thing I have here is I think I should be writing this down, but I believe you're writing it down. So the fourth
Yes.
thing is let me see if I can let me just put them out. Um First one is, I think, the overconfidence bias.
Mm.
When you're in your winning streak, you feel like a god in the market. Hence, being careless. You don't evaluate your trades like you used to. Um, Second one is flipping the switch. Flipping the switch. Number three. In fact, this third point is actually very good. I think I mentioned one. Well, I think overconfidence bias is the one with the first one I talked about, right? This third one actually helps you. Yeah. This third one actually helps you even in your normal investing. Yeah. If you're good with investing in stocks or whatever it is, this third point will help you, right? So what is it? If you observe, right? I'll be using Simi as my case study here, right? Well, I believe others will follow alongside, yeah. If you observe, yeah, you are quick to take profit, but not so quick to close a losing trade, right? If it's not so close to your, in fact, you're quick to leave, you're quick to take profit, but not so quick to um closing a losing trade. Yeah. Let's say you have a winning trade. You are so impatient to allow it to hit your TP, but you wouldn't mind waiting. Oh, I'll allow it to hit my stop loss. I wouldn't mind. Let it hit my stop loss. The end thing is that we are so hopeful in a losing trade. We are so hopeful in a losing trade. And doubtful when the trade is going our way. It's that simple, right? Just like what we're talking about losing. Yeah, I don't know if we see that red reading, we're like, I believe the market will reverse. I believe, I know. Oh, sometimes if you add prayer, you add scriptures, you add whatever you want to add, just in hope to see that market turns your way. But if you start going your way, the fear of losing the money you're seeing, the floating balance, the fear is there. Oh man, if I don't close it, I might even lose this. Now, something that is hard for most traders is, and just like yesterday, yeah, I knew, at least for the most part, that the market is going to drop well yesterday, right? One trader took profit here. Another trader, as of yesterday, held until the very last moment of yesterday. Two traders analyzed same thing, saw same opportunity. One took their profit here, did another analysis around here, took another sell, did another one, took another sell. One other person held. And in this holding, the person kept adding to their positions. Of course, market made the same move, did a pullback. He added once again here. Market sold, did a pullback. He added once again here. Market sold, did a pullback. Added once again here. Right? Of course, another pullback. Sorry. Here. Of course, another pullback. Entered here until just imagine. So whatever profit the first guy made, whatever profit he made cannot be compared with what this very person made, right? The truth is that the market is not always as rewarding as this. Truth. Yeah, the market is not always as rewarding as this. But this mindset is so difficult for an average trader. Ask me why. Ask me why. I'm waiting for a feedback. Ask me why it's so difficult for an average trader. Can you guys still hear me? Am I still audible? I just want to confirm if I'm still audible. All right. Amazing. The pain is simple, right? Yes, it's recorded. It's recorded, right? It's simple. The pain of losing what you have at hand, right? What most traders should learn is learning how to cut your losses short. Yeah. Let's say you took a sell, the market took you out. Fine, let it be. Don't go adjusting your stop loss. Let me increase so that it will cover. Don't do that. If you set your stop loss, if you're the type that stick to your stop loss, or in fact, that's how the market will start moving against you. You just close the trade. You know that it will definitely hit your stop loss. Just close the trade. Look for another opportunity. Take a sell. Right? It's that simple. Now, adding, in fact, the rule is learn to add to your winners and cut your losses short as soon as you can. Right? This is very good for investing. Let's say you buy stocks a lot. Yeah. Anyone that is not performing well, don't hesitate to just sell off that stock or sell off that share, whatever it is. I just don't hesitate. I still don't hesitate. I've been holding that one for like God knows how long. This particular stock dipped more than 50%. And God will have it, it came up to like 30% plus early this year. My mind told me, oh, leave it, leave it, leave it, leave it. I would have actually sold it then, right? Just on Friday. Yeah, it came back up to, okay, was it Friday? No, Monday. It came back up to I think 10%. You understand? Came up to 10%. I had to just sell off. I need my research again. I'm like, there's no hope for this company. A foreign company, right? I had to just sell off. Because me leaving it is hoping that it will go well, which I know every indication that. Just imagine, no, all right? So that's the main thing. But if you look at those your stocks here that are doing well, add to them, add to them, add to them. When it comes to Nigerian stocks here, MTN is doing well, Zenith Bank is doing well. There are so many lists of them. Transcorp Hilton, lots of them, yeah. Yours is to add to the good guys, add to the good guys, add to the good guys, right? I just need to point this out because it is so difficult. In fact, you might want to try it, yeah. You might want to try it. Yeah, of course, you might not if you know get my use pitching, if you know get the mind trying for your live account, you might get a practice account. Just start practicing it. Yeah. Would it be so comfortable for me to add to my winning trades? Trade is going, and the real deal is, let's say you entered your first trade with like 0.1 loss size. Second one should be like half of it. Yeah. Third one should be half of what you have here, not stacking, because if you enter with 0.1 here and you enter another 0.1 here, that's huge risk on your account, right? So you enter with 0.1, next one should be half of it, next one should be half of it. Then the third one, the one following should be, little, 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 little. So the impact should not be much on your account. So that is just what it is. Um, Adding to third one is okay. It's that simple, right? So at this point, I would like to ask if you have any question, just whatever it is, just ask me. Ask me. At least we still have roughly 10 minutes more on this session. Right, before we go off. Whatever question you have, just ask me before we call it a day. Any question?
Wow, the question.
Okay, you don't have. Okay. Um, Hannah, how about you? I don't know who answered now, say. Hannah, you don't have as well, right? Okay. So let me give us an assignment, right? Okay, all right. So here's an assignment. Yeah. Observe, or let's say, should I say gold? Observe gold today if you have the time, right? Observe gold. Today is what, Wednesday? Observe gold. Observe gold, right? 15 minutes, 3:30 today, right? This is all I need you to do. 3:30 today. This is a mechanical approach, mechanical kind of trading. Yeah, you have 10 minutes left. Mechanical kind of trading. Observe gold today, right? Do well to mark the open and the close of the first 15 minutes candle, right? The open and the close by 3:30. the first 15 minutes candle, the open and the close, right? So when you've done that, once the first 15 minutes candle closes after 3:30, yeah, observe, right? Any point that breaks out, sell. If you raise below, sell. If you raise above, sell. If you're using 0.01 lot size, chase for 10 pips. That's once you hit $10 profit on your 0.01 lot size, close. Or that's really just where your tip is going to be. If you're using 0.1, 100, if you're using one lot size, 1,000, that's like 10 pips, just for 10 pips. If you raise above, buy. If you raise below, sell. This is an assignment. Observe it and see for yourself. All right. When it comes to psychology, this also is important, sticking to what you say you do. So observe it.
Around what time, sir?
3:30.
Eh?
3:30. 3:30.
In the afternoon.
Yes. That's actually when New York market opens.
3:30 in the afternoon.
Yes. So observe it.
The
Observe.
first 15 minutes.
Yes. The first
Can you
15
see
minutes.
that?
Once the candle closes, wait for a breakout, right? If it breaks below, sell. If it breaks above, buy. That's it. That's just it. All right. So let's see how it plays out. So that being the case, we call it a day. I believe you got something today. I believe you learned something. If you did,
Yes.
yeah. So next thing is one thing to learn, is another thing to practice what you learned, right? So that's it about that. So all the best, family, and have the best day. All right.
So,
So let me call it a day. Share.
hi.